Good morning. Welcome to the morning market briefing. Today is Earth Day, Wednesday, April 22nd. And Natalie is really hooking the whole office up today. If everyone in the office or whoever in the office walks or runs a mile outside today to celebrate Earth Day, they will receive a $15 gift card to the location of their choosing. So shout out to Natalie, who is really leaning into both office culture and the environment. So we appreciate her. Let's talk a little bit about markets. The ceasefire, of course, yesterday, there was no deal. J.D. Vance, who, according to some reports on Monday, was on a plane to Pakistan, never actually left, and was instead at the White House and ended up not going to Pakistan. And it sounds like the Iranians and the U.S. are just not as close to an agreement as people had thought. The Iranians do not like the blockade, and it seems like they're not able to coalesce. So Trump came out with a statement last night, and we can share that. Said, based on the fact that the government of Iran is seriously fractured, not unexpectedly so, and upon the request of Field Marshal Asim Munir and Prime Minister Shehbaz Sharif of Pakistan, we have been asked to hold our attack on the country of Iran until such time as their leaders and representatives can come up with a unified proposal. So basically this is indefinite. There are reports out this morning that this is not indefinite, that there is that Trump's patience is being tried. But Scott Bessent, interestingly, who hasn't weighed in as much on these issues, now seems like he maybe has coined the term economic fury, because he is increasingly citing that in his public comments and on his tweets. He tweeted last night, the U.S. Navy will continue to blockade of Iranian ports. In a matter of days, Karg Island storage will be full and the fragile Iranian oil wells will be shut in. There have been some reports that if you shut in the wells, it's a 10-year process to try to increase oil production again. So that's the leverage that the U.S. claims to be playing with. I've seen some reports that they have about 15 days of storage on Karg Island right now. So we'll see what happens with that. I just don't know where this ends up going. I think it's a quagmire.
I mean, it seems that the market's reacting more positively than I would have guessed. I mean, futures are up.
Net, we're up.
Yeah.
Between yesterday and today, we're up, and I think we have a potential to hit another all-time high today.
Yeah, it's pretty remarkable, honestly. I mean, I think Bessent's, if anybody has a good read on where the pressure points is, he's doing the right thing. I mean, there were some funny photos that came out over the weekend. He's been meeting with a number of Treasury secretaries from other Middle Eastern countries, coming up with, how to manage the sanctions, how to manage money coming in and out of Iran. I want to say it was the dignitary from Dubai. They took an all-time weird picture where it looks like they're both posing for totally different pictures. They're looking in different directions. Scott Bessent's kind of doing like a big dog move, and the other guy's facing like 45 degrees the other way and not looking at the camera. It's pretty awesome, because Bessent was like, man, unbelievable, productive, happy conversations with this guy, and then it looks like they were two strangers standing like waiting for a light to turn, but both going different directions. Very strange, but I feel pretty comfortable he's got things under control.
I agree. Kevin Warsh yesterday, Tom, there was a lot written about this. I think some of the big things, we don't really need to get into a ton of this. Obviously, Elizabeth Warren really went after Kevin Warsh and really kind of sidetracked a lot of the early parts of the testimony. I felt like the first 30 minutes was just a shouting match that had very little relevance to anything that he was going to do as chairman. Timorous was not very generous in his recap of how Warsh approached things. He said basically avoided every invitation to put distance between himself and Trump. I disagree with that. He said he pledged a commitment to an independent Fed, but sidestepped the thorniest tests. He says that when Warsh did engage on independence, it was largely to argue that the Fed's recent troubles are of its own making. And the one place I would agree is that he didn't call for cuts, but he also didn't undermine the case for them. So, I mean, I think we're getting so deep into the politics of the Fed and the internal workings of the Fed when, guys, it's not really that difficult. If you expect inflation to go up, then you raise rates. And if you expect inflation to go down, you cut rates. That's how it works. That's how you ensure price stability. And you don't do it based on information that you got 6 months ago. You do it based on information that you think is going to happen in 3 to 6 months. And Kevin Warsh actually said it, works on lags of 6 to 9 months.
Yeah, he did a good job of, they were grilling him on previous statements where he said we needed to hike rates. And he was like, well, yeah, the economic conditions are totally different. He's like, I would expect for them to change that. I would think that in a different time too. That's how this all works. I mean, he did a really good job of explaining how the balance sheet is really the functional driver of inflation, that messing around with the balance sheet, printing money has caused all the problems, and that, the Fed really should focus more on moving rates up and down and not printing money, because one of those things is actually going to have a much bigger effect if you're not doing the balance sheet part.
Did you get the sense that he was talking to a wall when he was saying that?
I don't think anybody understood what he was talking about.
Including in the press.
Yeah. That people don't understand. It doesn't play because people just don't want to admit that the government wasting enormous amounts of money causes inflation.
For context.
Because everybody likes it.
For context, for the new listeners to this program or people who haven't been in the markets all that long, if you're just graduating college or what have you. When I was finishing college in 2008 or 2011, it was after QE1 and then QE2, conventional thinking was that we were going to have a huge bout of inflation because of the money printing. Now, that was offset by Dodd-Frank regulation and the banks having to keep more of the cash on the sidelines, so that never actually happened then. It did happen in 2020. But that was the conventional school of thought. There was not a minority view to think that money printing would cause inflation. Today it is.
But you also have the massive offset of the fact that everybody's home value dropped by 40%.
Right. You're fighting deflation with inflation, intentionally so.
And
Warsh is on the right side of history on that, by the way.
Yeah, I would agree. So it's a totally different, we didn't have massive cratering values of anything, and then we printed money at a scale that was, would make QE1 and 2 look laughable. The original taper tantrum, they were talking about maybe we might start rolling off $10 billion a month if the opportunity was right on the balance sheet. And we were printing $100 billion a month for 2 years. And so it's just the scale of it, the fact that we weren't seeing massive inflation or deflation. We weren't seeing a dying housing market. Everybody just panicked because of a pandemic that, mostly was oversold, over-advertised as to how crazy it was going to be. And it's silly now to think about how much economic damage was done and how they've refused to admit that the problem, the checks in the mail, the moratorium on rent, all these things, the suspension of paying your student loans caused so many problems. The massive influx of somewhere between 10 and 25 million people from third world countries. These are all massive inflation drivers, and yet
that would have been accepted as inflation drivers 15 years ago when I entered the business, which now I sound like a dinosaur saying all this.
Yeah, but the reasons they gave were supply chain issues. The reasons they gave were Putin's price hike. The reasons they gave were shrinkflation. They said that there were the great robber barons, price gouging at grocery stores. But the fact of the matter is they printed a ton of money, which caused the value of money, and then they increased demand insanely by giving that money to everyone, including people who were not generating any economic value. And that's inflation 101. And yet no one will admit that that's what happened.
And yet that's also supported in other places around the world. Like Europe had big inflation. They have different companies here. Are they doing the same price gouging that the U.S.? Come on. There's a lot going on there. Anyway.
But I will say that there were a number of things that came up that were absurd. We were talking about things we didn't think were going to happen. The biggest of which I think is probably the fact that directly over Kevin Warsh's shoulder was someone we learned is apparently a very close friend of Kevin Warsh, is Larry Fitzgerald, future Hall of Fame Arizona Cardinals wide receiver, just casually chilling in the front pew there behind all the testimony, which
and he was, other than Kevin Warsh, he was the clearest face in that picture, in that shot.
And it was very strange. And if you asked, a little Googling or Chat GPTing, allegedly they're very close friends. There's no explanation as to why they're close friends, but there was apparently reporting that they were huddled closely ahead of time. I mean, I guess getting their mind right, getting ready for the game, the big game, calling the plays. Very strange. There was a whole line of questioning about what the difference between a sock puppet and a human sock puppet is, and I would not encourage you to Google that. But it was just like Kevin Warsh claimed to not be familiar with a sock puppet at one point. I'm trying to think what else. There were a number of like really strange things.
Seinfeld.
Yeah, there was one rebuke that apparently Kevin Warsh has never seen an episode of Seinfeld, which seems pretty absurd to me, given that he's 54 years old and would have been, 20 when Seinfeld ended. So
you can't work at Duquesne Capital Management with like Scott Bessent and being like not sharing a Seinfeld clip from now and then.
I mean, I'm familiar with Seinfeld, and it ended probably when I was like 11 or 12. And I mean, Ben's a big Seinfeld fan. He's even younger than I am, so that seems insane to me. But
they talked about rough swag, and I couldn't hear I don't remember the context of that.
Yeah, he used the word swag in a way that I'd never heard it used before, and I meant to make a mental note of that, and I don't remember exactly. But yeah, he was like something about rough swag.
I think he was talking about like the path of inflation, so you got to remove the rough swag.
Yeah, and I was like, I don't know what that means. But it got dicey at points. There was a lot of questions about him divesting his investments, whether or not those investments were tied to Epstein or Trump's personal companies. And I mean, that's all they do that with everybody. And I mean, he just happens to have more assets than anybody who's ever been in the Fed chair. So it is what it is.
Potential deals today. Deutsche Telekom could reabsorb T-Mobile, in which would be the largest public M&A deal ever. I mean, this is what we've talked about. I don't think people are slowing their M&A. The M&A drum is not slowing, and this would be very interesting, and it would fall in another line of reabsorption of previously spun off entities. And so I'm curious if this goes through. I mean, Deutsche Telekom used to own T-Mobile. Then T-Mobile reverse merged by acquiring Metro PCS, Metro PCS technically acquired them, but T-Mobile took their listing in the United States, and so then T-Mobile became a U.S. publicly traded company. And then T-Mobile merged with Sprint in 2020, and so it diluted Deutsche Telekom. So now they only own 55 or 53% of the company, but Deutsche wants the whole thing. So that would be interesting if that went through. That would be massive. And I think we all know the reason. They want to set up a holding company that would own both entities, mash them together, and put that holding company in Ireland.
Nice. One of the more economically free countries in the world for now.
And then SpaceX is looking to acquire Cursor, and I had no idea what Cursor was until maybe 2 weeks ago when Petty was using it. Harrison Pettigrew is leading a lot of our AI efforts, and it's a really advanced AI coding platform, kind of similar to Claude, but you're buying it at a $60 billion valuation, not a $800 billion valuation. And SpaceX is going to look to buy that in its entirety once it IPOs. And if they don't IPO, then they're just going to pay them $10 billion and have an agreement with them.
Yeah, it's like it's almost like a call option where it's like,
yeah.
I'm not exactly sure.
I think the $10 billion is basically a breakup fee, but they're like, man, we can't, in good faith, come out and say we have a $10 billion breakup fee on this deal, because that would be a lot.
I mean, it's just one more reason that SpaceX is going to be an absolute force. And I mean, you could argue that the T-Mobile deal is a function of Starlink hitting the market in a powerful way. I mean, I really do think that there's a high probability that your typical telecom company is going to get market corrected by Starlink very quickly, unless they can come up with a similar service. Because the whole "can you hear me now" coverage maps, that's all going to go away when suddenly Starlink is inside of your handheld device, and you can be on a boat in the middle of the ocean and make a phone call to anyone.
Yeah, I mean, I do think that I think Starlink will ultimately, my view is, this is just me, I think that Starlink's going to be something that every premium subscriber has as an addition to their plan.
Yeah.
Because what you're going to have is you're going to, in very densely populated areas like New York City or downtown Atlanta, you're going to have a T-Mobile subscription or Verizon subscription, AT&T, because they have all the towers really nearby. They can go through buildings. It's fast. But, Verizon, AT&T, and those other guys, they don't want to build fiber into the middle of nowhere, Kansas, or out in the middle of the ocean. So what you're going to do there is then you're going to use Starlink. And so that'll be how you get that. And so it's going to be a premium product, but I think that everyone who wants to travel, or certainly in rural or even suburban areas, I think it makes a lot of sense for them.
I mean, I can't get a signal in my office.
Yeah.
And we're in a one-story building. Granted, we're right next to a mountain, which probably doesn't help. But, I mean, it's an interesting thing because, I mean, I don't know. I think the T-Mobile Deutsche Telekom deal is just going to talk about, getting stuck in the mud. I mean, it's going to be – we saw the same thing. SBC Global bought AT&T, resorbed their name, kept AT&T as a name, moved the headquarters to Dallas. And it's not like AT&T has crushed it since then.
Right.
So, I mean, that's what they do. Telecom companies break up, they merge back together, and then they don't do anything from a stock perspective. So
let's talk a little bit about AT&T. They had solid results today. Margins are improving, but it's all because of their fiber. If you actually look at their phone business, their churn was up a little bit. So where they're doing well is in that last mile, is in the, getting close to the house. Comcast is continuing to fumble the ball. They're gaining share there. AT&T is. And they said that we saw best quarter ever for advanced connectivity, internet customer net additions. You can also look at AT&T's results and get a read through for Apple, because they show the postpaid phone upgrade rate, and that did increase on a year-over-year basis, just as it had done last quarter. So I think that's a decent read for Apple, although I think that's probably baked into the cake by this point. Elsewhere on the consumer space, Capital One reported, but that's very messy because of their acquisition of Discover and then also their acquisition of Brex. And when you had Philip Morris saw massive deceleration in their Zyn business, down 22%. In terms of shipments. The offtake volume was up 10%, but then you had the inventory purge. Basically, where they're getting killed right now is the regulatory approval and disapproval of some of their additional flavors, and so that's really killing them. But I think that was, again, kind of baked into the cake. Insurance. For those people who are concerned about insurance rates really increasing, I spoke with one client the other day, and he mentioned this to me initially, and now Chubb, one of the biggest insurance companies in the world, is reporting that, quote, both property and financial lines insurance market conditions are soft or softening. That's a remarkable change, by the way, with, quote, portions of the property market softening at a rapid pace. Commercial auto is still firm, but again, rapidly softening market conditions are a big change and could bring some relief on the insurance costs. It's not good for the insurance carriers, but it is very good for anyone who buys insurance, which is the rest of us.
Yeah, I mean, property insurance is probably driven by the fact that the value of the properties is not going up, and the churn of the properties is basically zero. So if I go buy a new house, the price is not going to be as high as it once was, but also there's no necessity for new insurance. Mine's the same as it was, and it's not going to go up because the value of my property is not going up. And so you're starting to see that filter through. I mean, that's inflation. During the pandemic, we had high double-digit insurance inflation. I mean, sometimes 10, 15%, because your house, which was worth $500,000, now worth $800,000, and the insurance has to go up with it. But if you start to see those start to crater, the insurance is not going to increase.
I do think we've seen a little bit of a taco trade in the healthcare space. The administration backing off some of the more onerous Medicare adjustment rates last year, and so they're giving a little bit more money to the insurance companies. Well, the insurance companies aren't spending it. They're allowing it all to drop to the bottom line. Shocker, I know. But Elevance is flat today. Had, again, kind of like United Health yesterday, a nice improvement on margins. But Community Health Systems, which is a hospital operator, they're down 6%, and Boston Scientific down 3%. So I think that's the trend that we're seeing, is that we're seeing a little bit of a taco on some of these, of the crackdown on the health insurance. And I know that the administration wants to ultimately get back to that, but this is what happens when you get sidetracked by these overseas wars. It's just difficult to keep your foot on the gas on everything that they're doing. And then finally, just kind of on aerospace and data centers, we're seeing continued good numbers out of both of them, especially on the aerospace side. We just don't have enough planes right now. And then on the data center side, Vertiv reported earnings, and the near-term guidance was weak, but they expect big-time acceleration in the back half of the year. So expect data center construction and activity to continue, which should be good for a lot of the other companies that we're seeing. Overall, I continue to think that this earnings season is very supportive of a strengthening economy with moderating inflation. It's difficult to come up with different conclusions based on the companies that have reported so far. With that, tomorrow is Burrito Day, tomorrow is Tomorrow Day, and we'll see you then. Bye.